And here's our host, Tian Wei.
Hello and welcome to World Insight, coming to you live on CGTN from Beijing. We begin today's show in Hong Kong, where Chinese e-commerce giant Alibaba has gone public with a massive listing on the stock exchange. The listing is believed to be the largest share sale in Hong Kong since the year 2010. Before we go to our panelists about all the latest analysis related to it and beyond, take a look at this first.
It's the largest initial public offering, or IPO, on the Hong Kong market for nearly a decade. Chinese tech titan Alibaba is offering 500 million new shares this time.
This year marks the 20th anniversary of Alibaba, and we welcome this milestone to come home and to list here in Hong Kong.
The company made a strong debut on the main board of the stock exchange on Tuesday, with shares jumping 6.88% in the morning session. The listing is seen as a boost to Hong Kong, following more than 5 months of violent protests and its recent slide into recession. Experts said Alibaba's listing in Hong Kong will allow more users and stakeholders at home and abroad to invest in it.
For Hong Kong's capital market to continue prospering, it needs to welcome more new economies like us. We want to join the market and contribute to that.
The firm's business-to-business division first listed on the Hong Kong Stock Exchange in 2007, but delisted 5 years later. And in 2014, it debuted in the New York Stock Exchange, raising more than $25 billion. But with uncertainty still surrounding China-U.S. relations, the firm is encouraged to find ways to hedge. Alibaba now boasts 960 million digital economy users across China, with annual revenue reaching 411 billion yuan, or $58 billion. Earlier this month, the company posted new record sales on Singles Day, attracting $38 billion in sales in just 24 hours. With social unrest in Hong Kong and barriers in the U.S., what's next for the Chinese e-commerce champion?
On Alibaba's listing in Hong Kong, we are joined in Hong Kong by Hong Hao, the Managing Director and Head of Research at Qualcomm International. Also joining us in Hong Kong, Ronald Wan, the Chief Executive of Partners Capital International. Gentlemen, welcome to our program. I'm sure both of you have been talking about the issue from the early morning until right now. But what about the late night wrap? Mr. Hong, what do you make of the performance of Alibaba so far today?
Yeah, very strong performance, especially amid social unrest here in Hong Kong market. The market is willing to look through that, because this is a strong growth company and one of the leading Chinese internet company that is coming back to this part of the world. So I think the market is celebrating it.
Is celebrating it for how long, Mr. Wan? What do you think?
I think the performance of the Alibaba IPO has been really strong. I think the strong performance and the festive feelings and celebration will last for a while, because we've seen a lot of investors looking for long-term investment in Alibaba, and also I see that a lot of investors are being attracted to Hong Kong, and more tech stocks will be followed by others, listed companies, because of the successful listing of Alibaba. I think many good things are yet to come yet.
Well, Alibaba's listing in Hong Kong could be phenomenal, but it is the largest of its kind in the world anyway. So, Mr. Hong, if others want to follow suit, will they have the similar kinds of treatment or responses from the market? That's a big question mark.
Yeah, I wouldn't be surprised to see similar reception towards listing at a later day. I think Alibaba is heralding the trend of Chinese companies coming back to Hong Kong or even to mainland China to get listed. I mean, historically, if you look at the structure of Chinese listing, most of the really good, excellent Chinese companies are actually listed overseas for some reason. either because of the listing requirements and the listing procedure in the mainland Chinese market is too complicated, or the overseas market could offer a better valuation for the shares. But now, the table has turned, with the increasing competition between China and U.S. And I think more and more companies are actually looking to come back to Hong Kong or even to mainland China to get listed.
Mr. Hong, if I could remind you, this is right after 5 months of unrest in Hong Kong. Well, we can make Alibaba a phenomenon, quote unquote, but what about this, the long term? Or for most of the companies, it doesn't matter whether Hong Kong is going to have unpredictability in the future, as long as they earn some bucks from the market for their future investment. That's good enough. Mr. Hong, briefly.
Yeah, I think to a certain extent that's correct. But then, remember that putting money into Hong Kong market is actually investing in a greater Chinese market, because most of the Hong Kong companies' earnings actually coming from mainland China.
Yeah.
So I would say that, buying Hong Kong is actually buying China.
Well, it's understandable that both of you would rally the crowd about buying Hong Kong, but Mr. Wan, it is with unpredictability of Hong Kong market, even though everybody want to applaud for Alibaba's performance for today. So what about the so-called model, quote-unquote, Alibaba established? Is it going to be a sustainable model for the other Chinese companies, whether they choose Hong Kong or should they choose other mainland stock exchanges? What do you think?
I think Alibaba's successful IPO shows something. It proves that Hong Kong is still a premier Chinese, international financial center. Or we can say that Hong Kong Stock Exchange somehow is the international platform of the Chinese market. Whether the company, a company will choose Hong Kong or mainland other Asia's market, it really depends on the structure and the valuation and the competitiveness of the structure which the stock exchanges can offer. Somehow, if Alibaba model works, a lot of overseas listed tech stocks will pick Hong Kong as the premier, listing place. But for other mainland being incorporated tech stocks, I think that they still have the options to choose Asia's market. I think there is some sort of alternative arrangement between the mainland market and Hong Kong.
Yeah. You talk about the Alibaba model. What exactly is this model, if you term it that way, Mr. Wan?
I think Alibaba's model is that for overseas listed mainland tech giants like Alibaba. Of course, Alibaba is already the largest one.
The one and only, exactly.
Yeah.
There are not many similar ones.
There are some. Yeah, there are not many similar, but still a lot of leading tech stocks, not as sizable as Alibaba. Some of them may choose to broaden their shareholder base and diversify their financial base as well, because of the relationship between China and U.S. I think it is a good alternative for them to look to Hong Kong as an alternative platform, because Hong Kong is the premier financial center of China, and they are returning home. Yes.
And Mr. Hong, of course, if you look at the road that Alibaba took in terms of listing, 2007, the business branch of it, rather, was listed in Hong Kong, but it took it off 5 years later. Of course, 2014, went to the U.S. as well, now coming back to Hong Kong. How do you see this back and forth, zigzagging road Alibaba took? How is that correlates with the fate of Chinese businesses overseas right now?
Yeah, well, the Chinese always say, good things takes time. I think, previously, because of the dual listing shares, dual class shares requirement by the Hong Kong Stock Exchange, Alibaba wasn't able to meet their requirements, so they had to take a detour to the U.S. to get listed. And now that, because of the competition, the Hong Kong Stock Exchange is able to relax the standard, the listing standard, or make the listing standard more friendly for companies. So dual class shares are allowed, and also even for biotech companies who are not making a profit, is also allowed to get listed in Hong Kong as well. So I think the environment here is becoming more friendly, and I think as a result, Alibaba is willing to come back, and I think the market is giving it a warm reception.
Mr. Wan, of course, earlier Hong Kong Stock Exchange were facing one challenge after another. The unrest in the city is one thing, but even before that, there was also the attempt to acquire another company from the UK. Of course, it didn't happen at the London Stock Exchange. And what I'm saying is that, so what does that mean for the Hong Kong Stock Exchange? How sustainable will this kind of momentum as a result of Alibaba listing in it be able to continue?
Yes, after the failure a bit to acquire the London Stock Exchange, actually we heard some market news that Hong Kong Stock Exchange is attempting to acquire Spanish Stock Exchange. Of course, that is yet to be proved, the news. But what the Hong Kong Stock Exchange want to do right now is to maintain their competitive edge over other Asian stock exchange, or also over other mainland stock exchange. So you need to prove that Hong Kong is the premier international financial center of China. Given that Alibaba give a vote of confidence to Hong Kong Stock Exchange, I think the atmosphere, and the feelings of the stock exchange has become more confident right now. I think what the stock exchange would like to do is to attract more other mainland companies and other regional companies to pick Hong Kong as the listing venue, to show to the world that Hong Kong is still functioning and the market is still competitive.
Mr. Hong, on the one hand, we see over the past 5 months of unrest in Hong Kong, some of it was targeting at particularly companies originated from China's mainland. For example, some of their branches in Hong Kong, the operating spaces were even destroyed and looted. So how much confidence do you think Alibaba will be able to bring with its listing this time in Hong Kong? Some of the confidence Chinese mainland firms have in Hong Kong as a whole, not just the Hong Kong Stock Exchange, because it takes more than stock exchange in a way to attract businesses.
Yeah, I think it's a vote of confidence by Alibaba's choosing to come back to Hong Kong. It is one of the largest and most advanced technology companies in China, and also it has a virtual presence. Really, it's a scalable platform on which smaller companies can actually build out their presence on this platform. So I think it's a win-win situation for Alibaba, which is taking a listing fee from companies, and also it's for good platforms for smaller business growth. So I think Alibaba is deriving most of its revenue and profits from mainland China for now. So even though there is a unfriendly or even hostile attitude towards mainland Chinese companies, but I would say that being the leading technology company coming from China, I don't think Alibaba should have anything to worry about.
Mr. Wan, of course, Alibaba would enjoy all the cash it could get this time in terms of being listed on the Hong Kong Stock Exchange for its future research, development, and many other areas it wants to develop business lines. But think about it. How do you think the trend that Alibaba apparently tries to set would apply to the other tech companies from the mainland? Once again, if you look at their competitions toward one another, it's also a big one. For example, in the Tencent, for example, NetEase, for example, these are all companies that are thinking about the competition among themselves as well. So how would you see that in a way related to these kind of competition?
Yes, of course. We've seen that before Alibaba got listed in Hong Kong, we already have Tencent listed in Hong Kong, which is one of the largest company in Hong Kong as well. Given the latest move of Alibaba, I think this would like to demonstrate to other Chinese companies that what the company need to do is to broaden their capital base and broaden their financial base, basically to tap the investors all over the world to achieve equilibrium, and we achieve a better valuation in the company. So when the company develops, it can use cash and also use its equity as a weapon and as acquisition tools to leverage on the market and to acquire and to build a global platform, and also build 24 hours trading areas as well. I think these sort of models, I think Alibaba is demonstrating right now to the other Chinese company. So far, among all the large tech stocks in China, basically Alibaba is the first one to do it.
Yeah, but before we go, I still want to replay that footage once and again. Before we go, to let you leave, Mr. Hong, once again, Hong Kong and Shenzhen particularly are now on competitive edge with one another in a friendly way to attract high-tech companies and also to attract investment in terms of high-tech areas. How do you think across the little river over there will the two cities be able to establish their next stage of competition as a result of the latest news?
Yeah, well, I think Shenzhen is already taking the lead in terms of technology innovation. Hong Kong traditionally has been a financial center and will remain so for years to come. I think the industry structure here in Hong Kong is very much fixed, with property and financial companies, taking the lion's shares of the economic structure here. So I wouldn't be surprised to see Shenzhen continue to take the lead in technology, and Hong Kong continue to be one of the regional financial center.
I see. Hong Hao, round one. Thank you so much for both of you, for us to understand better about the latest going on at the Hong Kong Stock Exchange and Alibaba's listing.